It's the bottom of the eighth. The score's tied. It's time for the big one. So get ready. This is your host, George Huss, and this is the 401k Owner's Manual. Before we get started, a special request. If you enjoyed this free episode, please show your support by leaving a rating and review on iTunes. If you're on the 401k Owner's Manual YouTube channel, you can do it there. Thanks so much. I'll make sure to give you a shout out on an upcoming show to thank you. So let's begin. Recall in the first video coaching module, which was iTunes episode number 10, we revealed the top 5 mutual funds found in 401k plans today. In addition, we mentioned the top 10 stocks found in those mutual funds: Comcast, Amazon, Google, Coke, Wells Fargo, Berkshire Hathaway, Oracle, Exxon, Microsoft, and Apple. Today, we're going to bring to center stage for the first time a concept which has been a surprise to every plan participant I've ever talked with. It's called relative strength. And we're going to use the top 10 stocks I just mentioned to illustrate the point. Before we reveal what relative strength is all about, think about what you've typically heard from the experts. Have you ever heard a mutual fund manager or your broker say, "We've outperformed the market"? You may have even heard these words uttered in 2008. We only lost 40% and the market was down 50%, so we outperformed. We both know you can't spend that kind of outperformance. Anyway, relative strength is the idea that given a number of investment choices, you can measure the performance of each, setting one in direct competition with another, pitting brother against brother, marching through every choice, so that the strongest will rise to the top. Here's how it works. An investment's relative strength can improve if it rises more than its peers in a market uptrend, or goes down less in a market downtrend. Now, this is all well and good. However, it assumes the goal is to be invested at all times and in all markets. If the last 13 years has taught you anything, it's this: being invested at all times and in all markets is not a risk-free strategy. So let's consider taking a good idea and doing what we reasonably can to make it better. Consider this. Suppose we take the basic concept of pitting each investment choice against one another and include in the mix another investment alternative, the one Wall Street doesn't want you to ever think about: cash. Well, not really cash, but something close to a money market return, a 13-week treasury bill. So here we go. Taking the top 10 stocks we mentioned earlier and adding to the mix a substitute for cash, we're ready to do our analysis. The simplest way to view the competition is to arrange the results in tabular form. Those of you watching this on the 401k Owner's Manual YouTube channel will see the arrangement. We have 11 rows containing the investment alternatives and columns titled Rank, Ticker, Name, X's, and Buys. The column headings Rank, Ticker, and Name need no explanation. However, we need to focus on the headings X's and Buys. All we're doing here is measuring the number of times one investment has proven a relative strength win versus one of the other alternative investments. We're looking at 2 criteria. The first criteria is current relative strength, and the second is a somewhat longer-term historical view of the relative strength relationship. Remember, an investment's relative strength can improve if it rises more than the challenger in a market uptrend or goes down less than the challenger in a market downtrend. This is a simple filter. It either is or it is not. The current relative strength totals are presented in the column titled X's. The longer-term historical relative strength totals are represented in the columns titled Buys. As in the case of traditional point-and-figure charts, these buys are not a call to action. It's not a recommendation. It's jargon used by a point-and-figure chartist. An investment is said to be on a buy signal when there's enough demand, represented by a column of X's, to push the price point higher than the prior column of X's. So first, let's focus on the results based in the current relative strength rankings. The top 3 slots have been taken by Comcast, Amazon, and Oracle. Why? Because Comcast has captured 9 relative strength wins versus the competition, while both Amazon and Oracle have each captured 8 wins. Note the money market proxy has captured a 5th place slot because it's currently outperforming the 6 alternatives below it. In other words, you'd be better off currently holding money market assets versus any one of the 6 potential investments below, including Google and Apple. Now let's focus on the results based on the longer-term historic relative strength rankings. Here, the top 3 slots have been taken by Comcast, Amazon, and Google. Note also the money market proxy has fallen to the 10th place slot because the only alternative below it is Apple. The takeaway here is it's certainly possible for an investment to be on a buy signal even though it's currently demonstrating weakness. We continuously measure these data points because it is possible for the short-term trend to become the long-term trend. How an investor chooses to make use of current data has to do with his or her investment horizon and tolerance for risk. From my perspective, particularly when evaluating investment alternatives in a 401k plan, this is valuable information. Owning a highly regarded investment with poor relative strength is like owning the best horse in the glue factory. Remember, equity research analysts, mutual fund rating agencies, credit rating agencies, stockbrokers, registered investment advisors, fund managers, and the financial media all have a vested interest in what they're selling. Warren Buffett once said, "Many in Wall Street, a community in which quality control is not prized, will sell investors anything they will buy." My personal observation over the years can only confirm this statement. Let the buyer beware. Make no mistake, there are no disinterested parties when it comes to investment recommendations. Do I have a vested interest in presenting these ideas? Absolutely. The only difference is, in my opinion, these ideas are transparent. Given the same data points, anyone versed in point and figure charting will see the same thing. How they choose and how you choose to use it is up to you. The ideas expressed here are to present objective tools to provide a logical, organized, systematic way to measure supply and demand so you can break down barriers to making better 401k investment choices. My goal here has been to give you something you can actually put to use. Let me know if I've hit the mark or not. I personally respond to all comments. So that's it for today. Happy holidays to all our listeners. I'll get the complete transcript posted to our Facebook fan page, the 401k Owner's Manual, and to our website at yourwealthpreservationcenter.com as soon as possible. If you want to see a relative strength analysis of your 401k investment choices, here's what you can do. Click like on our Facebook fan page and post a request there. I'll message you a private link to grab it. Thanks so much. Until next time, I'm George Huss, and this is the 401k Owner's Manual.